The Hurley Investments market commentary of August 18th, 2025. Um, Filling in for Kevin today as he is off watching a boy compete in soccer tournaments and soccer games, now newly in college. So pretty fun and exciting time for him. And so fun for me to take over and just allow Kevin some time to hang out with family and enjoy some soccer games. So that's what we're doing. Just starting off, we have earnings of some of the things we follow. I listed earnings below. These are some of note coming up. Target, Walmart just represent similar retail earnings that are coming up for a lot of companies. But those are this week, and we'll get into those more earnings down below a little later. I did want to talk a little bit about the big picture from our uh, briefing article. I like these. Um, I don't think always they have the correct view on things, but it does seem to be apolitical and just some general explanations of sentiment in the market and why things might be happening. And the reality is that's basically what everybody does and what everybody is concerned with is what is the majority of people who trade and invest in the stock market, what are their thoughts and what are their reasons for their buying and selling, or more buying than selling, or more selling than buying? What's the reason behind the movements? Um, this goes over a little bit of explaining earnings revisions. So basically what this chart, as you can see where companies, and I imagine this also probably includes uh, the analysts. Sorry, tough to get that word out of my brain. Analysts' earnings predictions and how that they have been revised upward or downward based on what's happening in our economy and all of that. So you can see the main point you see in April, things start to head down pretty sharp. Well, what happened in April? We had tariff worries and all sorts of those types of things. So a lot of companies had a lot of big question marks as to how things were going to turn out. And then, of course, that got resolved and earnings revisions started to go up. More recently, we had the one big beautiful bill that got put into law. What that does is it makes permanent the 2017 tax cuts that Trump had signed into law back in his first term. And obviously, the market is going to like tax cuts. Just wanted to scan and see if there's some other point I wanted to make. Just the main point is, as of July, the estimate was that growth was only going to be 4.6%, and then the actual estimates of companies that reported was up 11.6%. So huge jump over what the low end of estimates was going to be at 4.6%. And obviously that's a big positive for the market. Earnings going great, and that's really, I would say, the biggest reason that we have of why we're hitting all-time highs as of just a couple of days ago, trading days. Touched it even yesterday. Opened up at 6477. Of course, it didn't hold that, but that was the high as of yesterday. Another good chart, S&P 500. This blue line shows how the stock market, the S&P 500, traded, and this red line is where the earnings per share estimates went. More recently, with these better earning estimates from companies have shot up. That's what's driving all of this growth. And for the most part, we're sitting back and watching it go. You've heard us talk a little bit about forward earnings. As he gets into that, historically, I think the average is around 18 or 19. I want to say probably 19 times earnings. If that's not a familiar thing to you or you don't know what that means, it just means what the market expects out of companies to, on average, across this S&P 500, of how they're going to be making money. Kind of a crappy explanation, but I don't want to overcomplicate it. So basically, anything over 19 is going to be historically high. And so the market is going to want earnings to justify a higher priced scenario where stocks are higher priced. To justify that high price, we want greater earnings. And again, that's kind of what we're seeing. Calendar 25 and 2026 earnings estimates are lower than they were at the start of the year, but both are rising again, at 266 and 301 respectively. Again, more of these lines going up in this graph of expecting how company earnings are going to go. Any questions? So my question is, I don't want to give away too much, so get the type correct here. So when will the party end? When will the party end? When are we going to see this start to take a turn and do something like this? Or it struggles, or this. This would have to be, I would think, I wouldn't think, this would certainly have to be a bad news event. Of course, what's triggered all of that drawdown in April of tariffs. But again, what is going to put an end to these highs, higher highs? What do you guys think? Um, okay, Stuart says September 17th, the Fed. You're talking about, man, why do I keep getting this blue type? So, September rate decision. Okay, I like it, Stuart. Of course, that will only be bad if they don't give us a rate cut. They give us a rate cut, there's more party. So I'll put that little caveat there. What else? Fourth quarter. What do you mean by that, Jim? Why is that a party ending thing? Stuart says then happy days are still here. Yes, we get a rate cut, then we're still in action. Jim says talk about Fed action. Okay, I think that can go with our September rate decision. What else? What typically ruins a good summer market? Come on, you guys know this one. I'll give you a hint. Think cyclical. Think calendar. Come on, don't make me beg. What typically happens? What typically happens after the end of the summer, usually around September, October, sometimes even the end of August. Nothing? Mercy, you guys must not be listening very good. Typically September, October are our worst months in the calendar year. February, April, March or April, usually it's February or March are typically down months. Jim says traders go away. No. Sorry, Jim. Budgets for next year are established. That might be a business thing happening. Is that what you're talking about, Jim Kohler? Mr. Bosserman, traders do not go away. They go away in May. So typically we get end of summer, uh, usually something starts to happen. We get some hurricane, it causes some worry. We get bad earnings at the end of the summer, puts an end to flat or up summer months. We get just some general uh, downward sentiment where it's hard to justify buying into the market. But for whatever reason, September, October, typically down months, and then we cyclically start to take a turn in usually November and beginning of December to get ready for a Christmas rally, and the stock market goes up for a Christmas rally. And then after Christmas, there's a Santa Claus rally or an end of year rally going into the final days of the year. Doesn't happen every year, and we don't know, uh, even on the years that it does happen, we don't know that it what day or time or what is the reason. It's always something different. So, all right, that might put an end to our party. We have also this week on Wednesday, 8:20, Fed speaking at the I don't even remember what it's called, but they go to Jackson Hole, Wyoming, which is where I was just a couple of weeks ago, driving a motorcycle up through Yellowstone and up into Beartooth Pass, and enjoying the windy mountain roads up there, and nearly getting run over by a bison herd, and it was wonderful. But we've got Fed coming to the financial gathering at Jackson Hole, and obviously will be asked plenty of questions. He'll give a little speech about things. So everybody's going to be clued into anything he might say that might hint at anything of whether rate cuts are coming or maybe not coming. And of course, he's not going to give any hints or anything. There's a chance he might give positive hints of some nature, but everybody is always watching what he's saying and um, reacting in childish fashion. So that might be a thing that's going to move our markets this week and kind of why things are a little bit flat as everybody's kind of waiting for what he's going to do and say and whatnot. So that's a couple of things. My next question is, what will keep the party going? See, because this is no guarantee any of this happens or does anything bad. Um, so, what's going to keep this party going? This is a question for you guys. Your hint is what has worried the market throughout the year and what has boosted the market throughout the year so far, and how might that change in the coming days and weeks? Bill says, good earnings reports. I like that, Bill. I'm going to say more good earnings reports. Ooh, you guys are on it. I like it. I'm also going to add continued higher earnings revisions. I'll just say estimates. Basically what we talked about up here. That will help. We have Stuart says peace in Ukraine. Bill says ceasefire in Ukraine. I like that a lot. Might be good if I spelled things right. Ukraine, Russia ceasefire, or better yet, an end or resolution to the war. I think people were hoping more from Trump meeting Putin. Was apparently positive, according to President Trump, but nothing really got done we know of concrete. He met with Zelensky again today, and it was certainly a lot less dramatic than the other time he had him in the Oval Office. I think that's a good thing. Yeah, an end to that conflict certainly will help. Let's see. Stuart says inflation done, or maybe you're saying down. That works. I like that. Certainly is going to give us a rate cut. So obviously, if we're getting no cut, and that's a bad thing, if we get a cut, let me see. I want to say this a little better. Cut. So 25 basis point cut might not be good enough. 50 basis point cut will be a huge boost. So that's what we look at. That's what we focus on, and we keep it fairly simple. Those are the things that we look out for. And there's certainly no reason why we can't get some good news. But we're realistic and know that we have this typical down couple of months, and we're looking for the best time to protect for that scenario. Seems maybe compared to other years, we're holding on a little longer, or maybe a little more optimistic, that one of these things might happen for us. So a little more delay in puts protection is probably what we're expecting for the next couple weeks, and certainly why we have been less protective over the last several weeks after companies have gone through earnings. Where will our markets end this week? I'm going to say higher. I think we're probably not going to get much out of the Fed Powell speaking in Jackson Hole. And I think that will probably be somewhat of a good thing. Dow is still technically bullish, although it's kind of hitting almost a triple top. Not quite, as it's, let me zoom in here if I can. Still higher highs inching up there. S&P is still technically bullish and looks even better. Hitting all-time highs and didn't get overbought as we did the end of July. And NASDAQ looks even better than that. Some little blips around the end of the month, and then rising past that. All right, so where will our S&P end August 25? Started at 2%, then went to 1% down. So I'm going slightly even more optimistic and saying flat, 0%. Which means I ought to change this. It is going higher, but chance that things go up and then pair back, as I guess what my crystal ball is saying. Earnings, Palo Alto Networks. Had to think for a minute on what that was. XP. Tomorrow we have Home Depot, Baidu, Lowe's, Target, TJ Maxx, Nordstrom, Walmart, Ross Stores. Are you seeing a bit of a theme? These are all retail sort of stocks. We have Zoom, meeting software, BJ Stores, Buckle, more retail. Tuesday also we have housing starts, building permits, MBA, oil inventories, and more importantly, FOMC minutes, which is what we already discussed. Um, unemployment claims, continuing claims, existing home sales, leading indicators. But the big what if is FOMC minutes and what Fed Powell says. So, how am I looking to trade? News, watching closely to news, events, and anything that can put a negative sentiment into our market. Watching what the Fed says, and I'll say, or doesn't say on Wednesday. Watching for when we might need to add protection for cyclically bad months in September and October. Basically, I'm letting things run and looking for anything that might cause us to worry and to add some puts. We had Meta and Palantir were a little worrisome today. They popped down 3.5% at one point and then came back above being down under 2%. As I watched those and looked at these charts, you can get an idea for daily movements and kind of a range of where things are. And I didn't see that this was extremely worrisome with the ranges of movements. Yes, it's kind of a lot percentage wise, but I didn't really see anything news wise that made me raise an eyebrow. You know, Meta, some people are worried about how they're spending more money on overhauling AI again, but they sure are making a lot of money off of their AI. So, and the fact that it so nicely bounced back off the lows was enough for me to be patient on that. But what I didn't mention is those of you that have shares in Meta, this might be a great time to add some covered calls, which I like that idea. I like that idea for possibly a few other stocks, but let's look at Palantir since I mentioned that. Palantir popped up above the 70 on our RSI, which tells us it's a little overbought. And it's kind of regulating, coming back down a bit, but again, we're not. See if I can find a pen here. We're not out of typical ranges, which is what I'm kind of more worried about right now. Could have gotten flinched here and bought puts, and then it keeps going up. And you can find quite a few scenarios during these periods where that might happen. So I'm trying to avoid that. But we also get tops and larger drawdowns. These are the types of things I'm looking at and trying to avoid getting whiplashed on protecting on these kind of shorter down days, which is kind of what that looks like. Just got a little ahead of itself and needed to kind of regulate back to a median. But Palantir is one, would be something I'd like to look at for a covered call. Apple, you notice these are ones that have, or at least the previous two are ones that have gotten to all-time highs. Apple has not. It's down from 250, basically touched 260 almost. And so there's room to run there, but they're also overbought. They've jumped up on some positive news, but that's one we might look at what kind of prices we could get on our short calls to run covered calls up at 250 or 260 to see whether we could get some good credit and a little bit of protection, but still some upside, some very good upside. Do want to mention Disney. We did have protection on, still have protection on, but it looks like it's probably going to get stuck in a little bit of a range. So I'm trying to find where might be a good place to take puts off or roll them out and see. Maybe you can see the lines I'm starting to draw here. So 116 and 112, I see a support and resistance and a lot of trading happening on. So I'm interested to see whether one way or the other, if it falls or breaks the resistance and support, to have a better decision or an idea what to do there. So, just a couple things I'm looking at and clued into. Are there any questions before we wrap up? Anything you'd like me to look at? Any questions whatsoever? All right, guys. No questions, so that sounds good to me. Hope you're doing well. Um, I'm mainly watching things as Kevin again is off doing soccer watching with family. So if you need anything, don't hesitate to let me know. But I'm just trying to enjoy this wonderful market as it goes up, and our accounts look great from it. And looking forward to seeing what's next. All right. Thanks, guys. Thanks, Stuart. Thanks, Jim. Thanks, everybody. We will talk to you later.